Good morning, and welcome to another edition of Black USA Crypto News. I'm your host, Kamal Hubbard, and as always, I'm so happy to be here with all the great content creators at Black USA News. Of course, got to give it up to Emmy nominated and other award winning Donnie Glover in the Donnie Glover Morning Show. Without him, most of us wouldn't be here on this platform. So, got to give it up to him. Also, the show right before me on Saturdays, The Blackout Live from New York with Tash Schmier. She's always talking about great stuff. So, be sure to catch it. Also, this weekend, be sure to catch 60 Minutes in Black with Michael Haney. And during the week, of course, you want to catch Shared Space with Quita and Chap, the Black Business Roundtable, the Robert Report, People Over Politics, and all the other great shows. Well, hello there, Michael Randolph. How's everything treating you out there in Tampa? Such a beautiful place and part of Florida. Would love to get back there. Tampa, Clearwater, St. Pete area. Uh, might be a while, but I love the folks there, love the scenery there, and glad you're having a great day. So thanks for joining us, Michael. Now, coming up next, I'm going to be back right here on Black USA News with the Black Blockchain Brunch. If you caught it last week, I had EB Crypto join me, Eric Brandt, who is a longtime content creator, and he's got a lot of stuff going on. He's been in the education space for crypto for quite a while, and he's been very successful. So glad to have him on the show. Glad to share what he has going on, and looking forward to just keeping a really great contact and relationship with EB. He's a great guy. He's done a lot in the space, and he came up from I don't want to say nothing, but he's made a lot. He's done a lot of great things and accomplishments, and glad to kind of share the spotlight with him to a certain extent and work with him in the future. But today, I have another very special guest that I'm looking forward to presenting to you guys. So you're going to have to tap out, then tap back in for that immediately following this show. So looking forward to that very soon. You need a new governor out there in Florida. Yeah, you know, um, he's a big supporter of Bitcoin and crypto. I'm not sure if he really understands how it works, but he's definitely trying to cozy up to the industry with the things he's saying. So, but everything else, yeah, I agree with you. It might be time for a change there. So, hopefully that change doesn't mean him going from Florida into the White House, but uh, you know, we'll see. Our politics are really becoming entertaining at this point, and almost laughable. But good thing is I'm taking this seriously. The world is taking this seriously, and that is exactly where I want to begin with some of our news when it comes to regulation of the crypto industry and the crypto space. And last week I actually missed this story about Hong Kong regulating crypto. And as soon as I get off the telecast, then I was like, oh wow, I forgot this story. So this is somewhat of an old story, but new reporting. And this comes to us from the South China Morning Post. Hong Kong's first step in regulating crypto comes with high costs, but exchanges are undeterred. Hong Kong's new licensing requirements for crypto exchanges come with greater burdens for exchange operators, but many want a foothold in the city. The rules, which now allow for retail trading, came into force this month, marking the first step in Hong Kong's bid to become a virtual asset hub. So, I mean, this is just telling you Hong Kong wants to be a leader when it comes to all this. And so the story continues. Hong Kong's long awaited cryptocurrency rules kicking off a new regulatory regime for virtual assets went into effect on Thursday, which experts say is placing a greater burden on exchanges in the city, but is so far not deterring business. The city's retail trading rules and licensing guidelines, finalized last week, represent one of the most exacting regulatory frameworks for centralized crypto exchanges in the world. As Hong Kong opens its arms to the volatile digital asset sector following a series of meltdowns last year. As of this month, crypto exchanges must seek a license with the Securities and Futures Commission, SFC, to sell and market to Hong Kong consumers. As the SFC starts to process license applications, exchanges that already have a large presence in the city have a 1 year window to continue operations while they prepare to comply with new rules or exit the market. The significant compliance obligation has not deterred interest from crypto firms hoping to gain a foothold in Hong Kong, said Joy Lam, a partner at law firm Baker McKenzie in Hong Kong. We have been inundated with requests from existing and new market entrants who want to become licensed in Hong Kong. So, what this story is telling us is, of course, Hong Kong wants to once again be a leader when it comes to having a series of exchange or the presence of cryptocurrency exchange in their jurisdiction, and they want to allow it to happen, and that's a good thing. So, have a LinkedIn user. Did I move to Florida? No, I did not move to Florida, but there are many people I enjoy and love in Florida. So all my folks and family out in Florida, love you guys. You know what's up, and can't wait to get back out there. Like I said, especially in that St. Pete, Clearwater, Tampa area. So excuse me, I digress. But let me get back to the news here because there are some other global news stories when it comes to regulation that I'd like to share with you. And the next one here comes to us from African Business. And Nigerian regulators edge closer to tolerating crypto. They're not there yet, but little more than 2 years after banning commercial banks from dealing in cryptocurrencies, the Nigerian authorities appear to be moving towards a more positive attitude towards crypto. Recent moves from Nigeria's Securities and Exchange Commission suggest that the country may be prepared to liberalize its approach to digital assets. At the start of May, the SEC announced that it would be permitting digital exchanges to apply for licenses on a trial basis. These licenses would allow exchanges to offer tokenized coin offerings, a form of fundraising that allows investors to purchase tokens that are digital representations of a given financial asset. While such offerings are usually closely associated with or backed by cryptocurrencies, the SEC is permitting only offerings of tokens that are backed by more traditional financial assets such as equity, debt, and property. Further, the SEC is preparing to offer fintech firms the opportunity to apply for an array of new licenses, potentially allowing them to act as sub-brokers, robo-advisors, fund managers, and more. The regulators will not allow crypto exchanges to do the same. However, while for now maintaining the restrictions on crypto activity, this steps towards tokenization this step towards tokenization does suggest that Nigerian regulators are considering how to regulate the world of digital assets in a more accommodative way. And so, once again, this really demonstrates how the world. And last week, I had that story about the global securities watchdog group urging more global regulation in the space. So, with that, we're seeing Hong Kong, Nigeria, and so now I want to take it home and take it on shore here to the United States and share my next story with you that comes to us out of Cointelegraph. And that one is US lawmakers aim for crypto regulatory clarity with proposed bill putting the screws to the SEC. The framework under the bill would allow certain tokens to qualify as digital commodities if they were decentralized and crack down on the SEC's previous approach to crypto. Lawmakers with the United States House Financial Services Committee and House Agriculture Committee have have released a draft discussion offering certain crypto assets a pathway to being labeled digital commodities. According to a discussion draft published on June 2nd, lawmakers proposed establishing a functional framework aimed at providing regulatory clarity for crypto firms in the United States. The draft bill would prohibit the U.S. Securities and Exchange Commission, or SEC, from denying digital asset trading platforms from registering as regulated alternative trading systems and allow such firms to offer digital commodities and payment stablecoins. Specifically, the proposed legislation cracks down on the approach many in the crypto space have criticized the SEC for taking by not offering clear rules of the road. The framework the framework under the bill would allow certain digital assets to qualify as digital commodities if they were functional and considered decentralized, and require the SEC to provide a detailed analysis of any objections to a classification of a firm as decentralized. The act requires the SEC to modify its rules to allow broker dealers to custody digital assets as if they were if they meet certain requirements, said the draft. Additionally, the act would require the SEC to write rules to modernize certain regulations for digital assets. So this story actually is very important because I've had a couple of conversations recently that really bring this story to light. I don't want to share who I had those conversations with or what they were about, but let's just say they were on both sides of the regulatory bodies as well as the private sector that is looking to really tap into all this. And I agree with both sides. From a regulatory perspective, there are rules that are in place. However, from the private sector that wants to invest in this innovation, they don't feel as though they have those clear regulatory guidelines in order to do so and not receive, a Wells notice. So, it's tough to be in the middle. I'll tell you that because sometimes you don't get love on either side. But at the end of the day, I think what the private sector is really looking for is just, once again, a sensible framework of how to proceed in this industry and not be susceptible, once again, to future regulation when they're trying to play by the rules. A lot of people, like I said, may not agree with me on that, but we'll see. We're starting to see that government now, especially the government in the United States, is really doing what it can to make it clear for people to understand and businesses to understand what to do in this space if they want to actually do business and be sustainable. So we're going to move away from regulation. I know I put a lot of emphasis, but as we can see, there's a lot of developments that are going on in the regulatory space. So on to the next story here that comes to us from Decrypt. And US senators still think Bitcoin adoption in El Salvador could pose a threat. El Salvador's Bitcoin experiment could be a risk to the states, a handful of lawmakers argue. While while El Salvador attracts more tourists American lawmakers are still pushing for a risk report on whether the Bitcoin friendly nation is a potential threat to the United States. Last month, Senators Jim Risk of Idaho, Bob Menendez of New Jersey, ranking member and chairman of the Senate Foreign Relations Committee, reintroduced a bipartisan bill asking for a State Department on El Salvador's adoption of Bitcoin and potential impacts on bilateral economic relations and law enforcement cooperation. The bill, titled the Accountability for Cryptocurrency in El Salvador Act, ACES, was first introduced back in February last year by Rish Menendez and Bill Cassidy, Republican of Louisiana. Given U.S. interest on prosperity and transparency in Central America, we must seek greater clarity on how the adoption of Bitcoin as legal tender may impact El Salvador's financial and economic stability, as well as El Salvador's capacity to effectively combat money laundering and illicit finances, a Foreign Relations Committee blog post says. The lawmakers want an analysis of El Salvador's adoption of Bitcoin as legal tender and risks for cybersecurity, economic stability, and democratic governance in El Salvador. El Salvador made headlines in 2021 when it became the first country in the world to make Bitcoin legal tender. President Nayib Bukele has bought large amounts of the cryptocurrency, and businesses in El Salvador now have to accept Bitcoin by law if they have the technological means to do so. President Bukele's Bitcoin experiment has been praised by those in the cryptocurrency world, but criticized by institutions like the International Monetary Fund and the World Bank. Safadine Ammous, author of the Bitcoin Standard, this week became the newest economic advisor to El Salvador's National Bitcoin Office, an entity managing all matters relating to cryptocurrency in the country. So this story is interesting because there are states that are examining whether or not Bitcoin should be used as legal tender. There's a lot of people in the Bitcoin community that are really pushing that legislation on a state level, uh, in various states once again. And, they point to El Salvador as really a success story. However, in my opinion, data really has been neutral. It has not been a net positive or a net negative for El Salvador. And as we can see, on a federal level, lawmakers want to continue to keep a close eye on how this experiment is going. And once again, they want to see if it will be something that would threaten the United States from an economic perspective. Because if that were to come home, once again, on a state level, where a certain state does choose to make Bitcoin legal tender, how could that destabilize the American economy? Not very sure, but we will continue to see. Now, this is a very interesting story that is also coming to us out of Decrypt. And, we're moving now from Bitcoin to Ethereum. And I wanted to bring this to everyone's attention here and read a little bit more for you in a moment. You know what? And I see what you're saying, Mr. Michael Randolph. How can people in the hood with little money get into the market? This is a news broadcast, and we might talk about that a little bit more in the next program. But you do pose a great question, and none of this is financial advice or tax advice or legal advice. But I will say this, just to be very straightforward with you, the easiest way to probably just begin buying Bitcoin is on Cash App. A lot of us use Cash App, and they have very low fee structure. So you're going to want to look into that and do your own research. But This is not a financial recommendation, but to me, it seems like the most seamless way to onboard onto crypto. And obviously, I'm not endorsed or sponsored by Cash App in any way, shape, or form, but I did want to answer your question. So, oh yeah, have I done an audio version of DeFi for the diaspora? I tried to buy an e-copy on my webpage. Yeah, I've actually switched my publisher and I'm in the process of that. And I will make an announcement here very soon, but do message me on LinkedIn and I will give you details on how to get the audiobook. I'm a first time author, self published, so nobody told me it would be as not so much difficult, but as interesting as it would be. There's certainly a learning curve to being a self-published. And yeah, but I do have an audiobook available. Yes, my website is currently uh, under construction to a certain extent in order to facilitate this new change of publishers. So be on the lookout for the audiobook very soon here, and I can definitely get a copy out to you. Like I said, just message me and I will find a way to get it to you as soon as humanly possible. So let me get back here to this Ethereum story since we just had a Bitcoin story, and this one comes to us once again from Decrypt. Has Ethereum been taken over by a cartel? Here's what you need to know. The bigger a staking cartel gets, the more rewards it earns, and the more alluring it is to its users. Centralization begets centralization. Yeah, so very interesting story. The Ethereum ecosystem finds itself in the throes of a controversy surrounding the outsized footprint one of its staking pools, Lido Finance, has on the overall network. Centralization concerns around LSDs are well founded, began a tweet by founder The Daily Gwei and independent Ethereum educator Anthony Sassano. He added, "My fellow Ethereans want Lido dominance to go down. Then they need to, if my fellow Ethereans want Lido dominance to go down, they need to create and promote better liquid staking protocols. There are a lot of liquid staking protocols out there, and Lido is definitely the leader, clearly, right? The current controversy surrounding the Ethereum ecosystem refers to liquid staking derivatives or LSD, particularly with Lido Finance. Liquid staking refers to depositing Ethereum in a protocol that then pools it with other deposit and stakes the ETH on their behalf. In return, users get another token representing their stake position, which accumulates its own rewards. In Lido's case, users receive staked Ethereum or STETH. The threat at hand is the current market dominance of Lido, which currently accounts for 70% of all LSDs, according to DeFi Llama. The pool contains more than 7 million ETH, worth approximately $13 billion, and it has grown by 12% over the past 30 days. The problem is that centralization is easy. Pseudonymous Ethereum Beacon Chain community manager Superfizz told Decrypt. He added that the current situation with Lido is risky because although a staking provider cannot halt the chain or prevent transactions, it's still it is still a critical threat to the social decentralization of the chain. Another concern are the aforementioned LSDs, derivatives, which are created on top of the staked ETH. Derivatives in finance refer to an instrument that derives its value from another asset. They are used to further speculate on a given asset, in this case, Ethereum. Ari Paul, founder of Block Tower Capital, said on Twitter, the main problem with this degree of centralization is when Lido faces government action or starts censoring to avoid criminal charges. So, as you can see, this can be a substantial problem. And Okay. Can BTC can BTC bought on Cash App be sent to a private wallet like Ledger? Yes, it can. Yes, it can. Certainly can. So once again, you have to do your research on that. And but yes, it's you can do that. That's something you can do. I definitely, once again, I'm not a spokesperson for Cash App in the slightest, but um, in my opinion, not financial advice, it is the easiest, most seamless way to onboard onto Bitcoin. So we'll see. But getting back to the story about Ethereum, it is very interesting. Lido Finance is clearly has the market dominance for liquid staking. There's other protocols out there where you can do liquid staking of Ethereum, and it what they've done has made staking in Ethereum very easy as well as very rewarding and profitable. Full disclosure, I do not own any Lido. I do own a little Ethereum, but gas prices are so high that that is, decreasing on a daily basis whenever a transaction is made in Ethereum. So, well, let me continue to move on to another very interesting story. Now, this turns to artificial intelligence. And I've been covering artificial intelligence for the past few weeks because there is a lot going on in artificial intelligence, and we are really just beginning to see how it's changing our world. So, um, this next story, once again, comes to us from Decrypt, and it says the Hollywood writers on strike will not rest until AI is stopped. Quote, it's not something we can walk away from, one film and TV vet told Decrypt from the WGA picket line, calling AI a plagiarizing machine. So, this generative AI, the buzziest thing in the tech world today, is also on the minds of TV and film writers as they reach a fair and equitable agreement to end the ongoing Writers Guild of America WGA strike. The dispute between the WGA and Alliance of Motion Picture and Television Producers (AMPTP) has entered a second month has entered into its second month in June, and gloom is setting in over Hollywood. Striking writers remain determined to have their voices heard and demands met. And one of the key sticking points is how AI tools potentially put creative jobs at risk. We understand it's not something we can walk away from. Screenwriter and TV producer Josh Friedman told Decrypt on Thursday outside of the historic Paramount Pictures in Los Angeles. We're here. The use of AI remains a critical factor in the WGA's negotiations. The WGA's proposals include regulations on the use of AI projects covered by the union's minimum basic agreement, or MBA, or the collective bargaining agreement that covers benefits, rights, and protections for most of the work done by members. The union proposed a regulation that AI cannot write or rewrite literary material for such projects and can't be used as source material, plus MBA covered material also cannot be used to train generative AI. Now, um, this is like the growing pains that we're seeing with artificial intelligence, and you know obviously the union in Hollywood has raised a very strong concern. It's almost like some of the concerns that are being brought up in academia as well. How can and how should AI be used to create work? They're clearly afraid that it's going to put people out of jobs, as well as not give writers credit for past work when it's used in a generative fashion. So, Michael Randolph, good to see you chiming in on the show here. We're about to start teaching poor Black youth in the hood AI and Chat GPT as a means of uplifting them out of poverty as well as Web3. Well, Michael Randolph, all I have to say to that is let's see how we could work together. I definitely would love to share my book with the folks that you're working with. So let's connect somehow and make it happen. Um, Thank you again for chiming in. But I want to go to the last story here before I wrap up. And this comes to us from Crypto Slate. And it is also a story covering AI and the concerns that AI is presenting to us all globally. And this comes to us once again, I may have said it, from Crypto Slate. And Japanese regulators warn OpenAI against collecting sensitive data. Japan's Personal Information Protection Commission has cautioned OpenAI against collecting data without consent. Japan's Personal Information Protection Commission warned OpenAI against collecting sensitive information without people's consent, Reuters reported on June 2nd. The privacy watchdog also asked OpenAI, the Microsoft backed startup behind ChatGPT, to minimize the collection of sensitive data for machine learning. The regulator added that it may take further action against the startup in case of more concerns. The regulator emphasized the need to balance privacy concerns and the potential benefits of generative artificial intelligence, such as boosting innovation and tackling problems like climate change. The warning comes after the Japanese government's AI Strategy Council submitted a draft last week, raising concerns over the lack of guardrails for AI and the risks it poses. This is not the first time OpenAI's data collection methods have been questioned. Canada began investigating the startup for allegedly collecting data without consent in April. In Italy, ChatGPT was temporarily banned after regulators scrutinized the firm's security protocols. On April 10th, however, Japan's chief cabinet security secretary Hirokazu Matsuno voiced support for OpenAI. He said that Japan would consider incorporating AI like OpenAI's ChatGPT chatbot into government systems if privacy and cybersecurity concerns are addressed. The same day, OpenAI founder and CEO Sam Altman told Bloomberg that the firm is working on expanding operations into Japan. Last week, however, Altman backtracked and said the firm had no plans to leave Europe. With the rapidly growing popularity of AI platforms, regulators around the globe are fumbling to rein in the new technology. Japan, in particular, may be incentivized to embrace AI to boost productivity amid its declining population. In May, Altman urged the US Senate to regulate large AI models through a licensing body, a set of safety standards, and independent audit requirements. So now, just like there needs to be regulation in crypto, we're also seeing that there needs to be greater regulation in AI. Hey, Jamarly, how's it going? Good to see you chiming in here. Hope you're having a great weekend, sir. And so the other thing too about this that is also very interesting is the intersection of AI and cryptocurrency, which that's why I'm talking about these AI stories. So you kind of have a basis and a foundation in AI, and when they converge, there's very interesting things that are happening that I'm looking forward to sharing with you guys in future episodes here on Black USA Crypto News. So with that, I hope you have a great rest of your day. I'll see you momentarily for the Black Blockchain Brunch with my special guest. And with that, have a great day and stay safe out there. Take care.